I want to welcome everybody to this evening's presentation. The topic is trading the NFP and major news events. My name is Fred Razak. I'm a senior trading strategist here at CM Trading. And tonight we're going to go through a list of different news events that actually come out besides the NFP. Okay, the NFP is one example of it. But we're going to go through some major news events that shake and rattle the markets. Okay, and then we're going to actually discuss some real life examples that I've seen in my lifetime, and then we're going to actually do some of the strategies. So in front of you, you should be able to see this evening's webinar goals. Okay, so basically what news shakes and rattles the markets, okay, what kind of news we want to look for, a real life example and strategies to trade the news, and of course I'm going to go through question and answers towards the end. So without further ado, besides the NFP, what other major event of the year does shake and rattle the markets? Okay, so number one, okay, I'm going to leave it as an open question there, but I'm going to just get straight into it just for the sake of time. Number one is interest rates. Okay, not even a question. Interest rates affect the market so major. Okay, so predominantly as to what happens in the markets when the interest rates actually hit the markets. Now, there's FOMC, excuse me, there's the ECB. FOMC is for the Central Bank of the United States. It's a Federal Reserve interest rate. It's basically an interest rate that the government lends to banks in order to lend to the public. Now, if they increase interest rates, well, guess what? The can gets, kicked down the road, and you're the one that has to pay for it more, right? Because if the government raises interest rates to borrow money, that means that the banks will increase interest rates to their customers because they have to pay more back to the government. Okay, so interest rates are the most important factor in liquidity of cash in the markets, not even a question. Okay, if it costs more to borrow money, okay, then people are going to stop borrowing money and the markets are going to kind of retrace. Okay, now if it costs nothing to borrow money, then people are going to go and borrow more money. Okay, and so the economy is going to grow, but there needs to be a balance because of something called inflation. Inflation is a situation where basic goods, okay, a basic basket of staples that you consume and I consume, bread, milk, water, whatever you want to call it. Okay, if there's an increase of prices there, it affects interest rates as well. So, I'm getting into the more economic factor of it, but I just want to highlight the first thing that moves and rattles the markets are interest rates. Now, number two is obviously the NFP. Okay, now the NFP is new jobs created in the previous month. Okay, it comes out usually the first Friday of every month. And the reason I say usually, it depends on whether or not the preceding Wednesday is also within the same month. So under this week, okay, we had the first day of September, I believe was Monday already, okay? And so going into the NFP, we already hit a Wednesday that's within this month, so the NFP is going to be on this Friday, okay, tomorrow. Otherwise, if the first day of the month comes after Wednesday, then it's follow to the second week Friday. Okay, so just because it wants to give the entire month together to collect that data and then publicize it. Okay, now here's a disclaimer. Okay, as much as we know about the markets, we don't know. And meaning to say, we could all draw the most fabulous mathematical equations to the markets and why something should go up or should go down, but at the end of the day, okay, the weakness of data, if you will, okay, of collecting statistics, is that there's always a margin of error, number one. Number two, who's to say that it's an exact barometer of what's going on in the market, okay? And number three, it's arbitrary, okay? To a certain degree, it's arbitrary. Because, it could be cyclical, it could be because of, specific reasons why unemployment went down a certain month over another month, okay, which does happen, okay. Usually there's more there's less unemployment, there's more jobs during the holiday season of Christmas and Thanksgiving from November going into December. So there's a lot of factors that affect NFP. So sometimes if the number comes out and it beats expectations, that sometimes isn't such a great number and the markets won't react positively to it. And this is why I say you shouldn't go into a position before the number, because ultimately you don't know how the street, how the market will react to that number, even if it's stellar. Okay, maybe it wasn't as good as it should have been. Okay, maybe it should have been even better than what it was. Okay, so the NFP is obviously a major factor that shakes and rattles the markets on a continuous basis, and it doesn't just change the markets in the United States, which it reflects the new jobs that are created in the United States, so it has a ripple effect on the USD. Okay, the most affected symbols of NFP are US related securities. Okay, so number one, the Dow Jones, without a question. Okay, if there's one thing I would want to trade through the NFP, it's the Dow Jones. Number two, any US based currencies. Okay, so it's Euro USD, GBP USD, USD Canadian dollar, Aussie USD, anything with the denominator of the US dollar is obviously going to be affected. Some more than others, okay, because some are more connected to the US dollar, okay, and some less. Okay, so you know, those of you that have been, you know, participating in my daily review, you can get it off Facebook, you can get it off the YouTube, off of our channel. You'll notice that I mentioned this, okay, of what to hone in, okay, during these type of news events. Okay, so NFP, very important. It's a lot to do with stock selection, and not stock selection, symbol or instrument selection, depending on what you're trading. Okay, U.S. stocks are also affected by it, by the way. Okay, some more than others, because some are much closer to the nucleus of the news of the NFP. Now, another major event that everybody knows about are elections. Okay, I've mentioned this. Those of you who have attended my Make Me a Trader program, I always bring up the chart. When Donald Trump became president of the United States, the market went from 18,300, tanked, okay, to 7,400, and then rallied to 27,000 that we had it only just last week. Okay, so amazing scenarios happen when there's an election. Okay, even last year, okay, when there was elections of the ANC last year, and former president, I guess, Zuma was ousted, the rand got very strong, went down to 11. Okay, right now it's close to 15 or on 15. And it went down to 11. It got so strong versus the dollar because there was optimism that there would be change in the government there. Now, unfortunately, this is a situation that happens, not always forewarned, but war. Any sort of conflict around the world shakes the markets, okay? And a case in point of that was just 2 weeks ago. And we'll even take a look at the graph of what happened to one of the oil refineries in Saudi Arabia just a couple of weeks ago, and how it affected the market. Now, lastly, obviously, terror, kind of any sort of terrorist activity around the world, okay? September 11th to be the gross example of it, okay? To be the, not gross example, but to be the extreme example, okay, of a terrorist attack, obviously. But these things do happen, unfortunately. And there's a common denominator here, okay? The common denominator amongst all these news events is that some of them are not anticipated, okay? Such as these type of unfortunate events that happen to mankind, such as war and terrorist activities. They don't come up on a regular basis, thank God, okay? And they should never come up, and I wish that it was not a scenario that they did come up. But they do come up, okay? And they do create themselves a trading opportunity. Okay, now you're not celebrating the fact that the people are dying, you're just trading the markets based on how the markets are responding to the news event. Okay, I want to make sure that that's very clear. All right, so the biggest question that we have tonight is, well, Fred, how do you trade the news, okay? Am I supposed to buy before the news comes out? Am I supposed to sell before the news comes out? What am I supposed to do? What am I looking for? Well, I'll tell you something, and I told you just at the preface of this presentation, none of us are prophets. We are human beings. At least I'm not a prophet. Okay, I might anticipate what things can happen, but I can't know with certainty what's going to happen. So there's a certain element of risk that we are taking when we are trading the news if we enter the market before the news event comes out. Okay, now there's a unacceptable amount of risk there from a trader's perspective. Okay, from a trader's perspective, there's an unacceptable amount of risk that people are taking. So it's important to know that. Okay, so with that said, what am I supposed to do? How am I supposed to actually trade the markets, Fred? What am I going to do? So in front of us we have a classic scenario where the guy misses the flight and it gets ahead of him. Okay, he can't tap into it. Okay, now he wants to be successful. He wants to go and make this type of opportunity. Okay, but he can't make it because he missed the flight. And if he missed the flight, that's a really horrible scenario for him because he wants to be able to catch that flight. And unfortunately, he can't catch that flight. So with that said, what is he supposed to do? Okay, so this is an analogy for our case where you missed the trade. Okay, either because there was some sort of news that came out that you didn't anticipate, or there was news that you did anticipate, but the market moved too fast for you to actually enter the market. Okay, which happens a lot. Okay, or any of those type of scenarios where you can't get into that first move, the extreme move that the market makes. Now, again, people like to trade the news because of one reason, and that one reason is because people like to make money. And people like to make money in trading the news because it's fast, because it's volatile, because the market moves 100 pips or 1,000 points in such a short period of time. If you ask me, okay, personally, I would rather trade a full day's trade, okay, as opposed to trading the news in such a vicious type of moves. Because yes, you can make a lot of money, but you got to think defensively when you're a trader, and you got to think about, you know, what could happen to you on the flip side is that it could also hurt you, okay, especially if you're on the wrong side of the trade and you're trying to get yourself out, and then the worst thing is that you do the flip, right? Because you the thing goes up and you start buying it, okay, and by the time you bought it, it's at the top of the move, and then it goes down, it goes against you, and then you sell it and you say, wow, okay, look at how much, that's not fair, I bought it there and I sold it here. Now if it's gone down, I'm going to short sell it now in anticipation it's going to go further down, and it doesn't, it goes back up, and you're like, your head is so messed up that you're just like making all the wrong mistakes because you're not having a trading plan. Okay, so I'm going to discuss these 3 case scenarios. Okay, these are my golden 3 case scenarios to trading the markets. Okay, number 1. Okay, this is bona fide. Okay, this, you can test me on this, you could challenge me on this. These are 3 case scenarios that the market actually responds to a news event. First case, okay, first scenario, okay, sometimes it happens that nothing happens. The market didn't respond to it. Why? Because the news was already factored in. Have you ever heard that before? The news is factored in, okay, and the markets don't move anywhere. ECB president comes out with, you know, XYZ, okay? FOMC comes out with unchanged rates or changed rates, and the market does nothing. It expected it, it anticipated it, and nothing happens, okay? So nothing happens. Now, I admit to you that this is the rare case, okay? But basically, these are 3 case scenarios, okay, that you can kind of categorize responses to news events, okay? And the reason I do it is because there's a strategy that you can apply to each one of them. So if nothing happens, nothing happens. Nothing has changed, okay? There's nothing you can do in order to move the market after the news affected the market and it hasn't done anything, okay? If the news hasn't if the market hasn't responded to it, guess what? There's no reason for you to respond to it either. Okay, it makes perfect sense. Number three, I'm going to jump to number three first because I'm going to spend most of my time on number two. And number two is the case where it happens most of the time, so I'm going to just jump to number three. Number three is a trickle effect. We move extreme in one direction, and then the markets continues going in that direction. We go up 100 points, and then it goes to 101, 104, retraces down to 102, and then it goes back up to 105, 103, 107, and it keeps on moving in the upper direction, but it just churns, okay? It just really takes a long time until it really solidifies, okay? Which is the case in many, many situations, okay? And in that type of case, we find ourselves really limited about what we can do, okay? Because we missed the major move, okay? But then there was a continual move in that direction, okay? And that direction is not as extreme, okay? Because let's say it went up 100 pips, and then it continued going up the rest of the day 20 pips, okay? So is it worth it for me, okay, to take that risk, okay, to make an extra 20 pips after I missed the 100 pips? It doesn't make sense, okay? Who's to say that it might not go to 150? You're right. You have to integrate some of the lessons that you learned by us about technical trading, especially if you broke a resistance level, that's more significant, okay, and it's more effective when you're trading, okay. Now the case two happens the most often. I've seen it dozens and dozens and dozens and dozens and dozens of time. I'm not even saying it, okay. And the faith strategy is basically a strategy. There's a not stream